I'm Sasol and Rebosis of BizNews, and with me for today's Market Insights is Counterpoint's Piet Viljoen. Piet, let's start off with the unemployment data released earlier this week. A further 660,000 jobs lost in a single quarter, expanded unemployment rate of 47% and youth unemployment of 77%. How can any economy hope to be successful when half of the country's available workforce can't find jobs?
No, it can't. And I think that our joblessness rate or the unemployment rate is a signal that the current economic policies, or not the current policies, the policies that have been in place for the past 20 years have failed completely and utterly. So I think just a sign of that, and one can't be successful with that level of unemployment.
Piet, and what's even more scary is the rate of deterioration. It was dire and more than 500,000 jobs were lost in a single quarter. But how does this impact your investment thesis, especially South African-based companies that earn majority of their earnings in South Africa over the next 10 years? If our unemployment is going this rate this quickly, are there any signposts of reprieve for the labour force?
Well, the first signpost of reprieve was that the ANC did really poorly in the last municipal elections. So to the extent that their policies inflict this level of unemployment on the population, and the population then start voting against them, that is a positive sign. So that's, but that's the grasping at straws right now. At the moment, the environment is not conducive for business to employ people. It's not conducive for business to invest capital, and therefore it's not conducive to growth. Fortunately, from an investor's point of view, share prices by and large discount that this continues into perpetuity. And I think there's a non-negligible chance that it doesn't continue into perpetuity. And on that basis, there are still some investments that have high enough prospective returns to justify allocating capital to local South African investments. Having said that, and I think I've said this before, I think it would be very unwise to have all your money in this market by itself, because the environment is risky. The political environment is, there's an incapable state in charge. They can't execute on any of the policies, and the policies are dumb in any case. So it's an untenable situation. So I don't think one should have all your eggs in this basket, but because prices are so low, it warrants at least some eggs in the basket.
Piet, if there are no reforms that you're so desperately calling for, will we be seeing much of the same into the future? Is reforms a necessity to get this country's economy and our employment rate back on track?
Yes, we desperately need reforms. We need reforms of labor legislation. We need reforms of rules and regulations that impact the ability of businesses to allocate capital, to do business, to engage with customers, to make it easier and quicker, and that'll create growth and that'll create employment. But if that doesn't happen, then I think you can extrapolate the current trend into the indefinite future.
Piet, on the business front, Impala's second attempt to take over at Royal Bafokeng, they just announced this morning that they've acquired more of the business, around 31%, 25% they took from some large asset managers, and they've been slowly eating away this week. We know Northam owns a third of Royal Bafokeng Platinum now. What does the new Royal Bafokeng look like with Northam and Impala as large shareholders?
Well, it seems that, a couple of things. It seems that shareholders favor Impala's bid. I think the asset makes more sense for Impala. They're contiguous. They share the same facilities in some instances. So I think it makes, there's more synergies to be had for Impala. So Impala can probably pay a higher price than Northam can. I'm not sure Northam's balance sheet can carry buying out the rest of RB Plats at the current or the higher price that they would need to pay. So it looks like Impala is in a better position here, but I think the fight's not clear cut. If you're going to have two large shareholders, it's going to be difficult to make decisions. I think you'll want one significant controlling shareholder. And to get there, maybe Impala has to pay up even more. And I guess that is what the RB Plats share price is signaling, trading at above Impala's price of 150 Rand. It's signaling that maybe Impala will have to up the offer to get more shares on board to get control of the asset.
Piet, a little bit of a bizarre question, but topical with the holidays coming up. You as a senior portfolio manager that's in charge of your own funds, when you're on holiday, how do you manage your risk with companies? What happens if there's a start-off situation with a company within your portfolio and you're on the beach or in the bush, or an event like COVID-19 where we saw equity markets drop 30% in the matter of a month?
Yeah, well, firstly, I mean, if there is a sudden deterioration in the environment, or an air pocket, as one would call it in share prices, there's nothing you can do in any case. I mean, you can't transact. The best defense against unexpected events is to have a well-diversified portfolio of assets which are priced generally at well below the intrinsic value, in other words, priced with a margin of safety. So, and then you can go away on holiday and not worry about it. I mean, a portfolio isn't something, at least the way I invest the funds I manage, I'm not trading every day. I'm not buying and selling stuff every day. I might put in trades once a month, sort of thing. And then I just leave it alone because it is a well-diversified, robust portfolio. As I like to call it, it's a bundle of twigs. We have a whole bunch of individual positions where each one on their own might turn out to be a standoff. You never know a priori. But if you put those twigs together, and one breaks, but you've got that bundle together, it's still a very strong bundle. So, no, I comfortably go away on holiday and I don't have to worry about the portfolio very much at all. In fact, and I think I've said this before, being away and leaving the portfolio alone is probably a better outcome for the portfolio than tinkering with it.
Pete, lastly, just beginning this week, we've had some of South Africa's top fund managers on the show giving their stock selection or their preferred stock selection for 2022. We're not going to be keeping tabs from a returns perspective. We understand if picking a single stock is similar to going to the casino, it's just more for educational purposes, and we'll question you on them when there's certain corporate action or results of that company. Just to give you an idea, Koki Koyman, the banking guru, he chose Capitec. I had Peter Major on yesterday. He's obviously commodities focused. He didn't have a pick. He thinks that it's going to be a tough year for commodities in 2022. And just after this, I'm chatting to Chris Logan. I'm not too sure his pick is. Sorry, I didn't brief you on this beforehand, but just quickly give us your pick and then maybe just some of the reasons why.
Okay, so I'll give you two picks. So I'm gonna hedge my bet somewhat. I'll give you two picks. I think the one pick is Sasol. I think the world is not investing in oil and gas extraction enough to cope with a demand which will still be there for years and years to come, despite the best efforts and in a good way, the best efforts to go carbon neutral. I think the world will still need oil, and I think we can see, if not next year, the year after, significantly higher oil prices because of the underinvestment in oil extraction capacity. So that's the one pick. And the other pick is a very small cap business. It's quite a stinky one. It's not well liked by people, but that's why it's cheap. It's a property company, and I'm well known for not liking property, so I'm picking this on purpose. It's a company called Rebosis. Its A shares had distributable earnings now, and the results today are over R2 a share. They haven't distributed any dividends, but the earnings are there, and they say they've done a deal where they sold the company for multiples of the current share price. So these shares earn R2.30, and they're trading at R1.50. So, there's a non-zero chance that this share is very cheap. There is also a non-zero chance that there's something funny going on that could turn into a standoff. So I wouldn't put my grandmother's money into that one.